Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with James Van Straten. James, thanks for being here in the New York studio.
Thank you for having me, Tim. I think this is the third time I'm on here, but the first time in person. So looking forward to this discussion.
And happy holidays.
Happy holidays as well.
It's December in New York, so
it's freezing. It's absolutely freezing.
But also festive, right?
Yes, very festive.
Yeah.
It's nice though. Usually in London, probably now it's dark, gloomy and raining. So I'll take the clear skies and sub-zero temperature.
Yeah, no, it's a little windy and cold.
Yes.
Right before we started, we were talking about Microstrategy. Can you kind of walk us through your journey with Microstrategy, when you first had a position and where it is now and your thinking? Is it short-term thinking, long-term thinking, or just the reality of it, I guess?
So I've been a shareholder in Strategy pretty much since August 2020. And that is not because I saw the thing early. It was more of a jurisdictional arbitrage, that all our money in the UK was sitting in pensions, or we have a SIP, which is like a self-invested pension plan, which was in the triple Q, or a derivative of the NASDAQ 100. And this guy comes out of nowhere and says, we're going to convert $500 million of cash into Bitcoin. And I was like, I've never really heard of the company. I thought I heard of him in the 2000 tech boom that the guy blew like the 99% all-time high. And I was like, yeah, that sounds like my risk appetite. So threw the pension into the thing, and then followed his journey with everything. And again, like Bitcoin, there were 30, 40, 50% drawdowns. And then you saw the evolution of Saylor and him learning on the job. Every month he was learning on the job, and you saw new iterations. I remember the interview about him learning about the ATM share sales. He's like, I can sell shares into the market. Great, I'm going to sell shares into the market. Start then doing the convertible debt. And then lo and behold, he's now 8 billion in convertible debt. But the journey's been, it's been one of the most interesting journeys I've ever seen. But obviously being in Bitcoin since 2017, it's a fairly boring asset. But seeing a man on that journey, it's like watching someone through the lens of Bitcoin. And that's been the most incredible thing, and how he's evolved. And yeah, I had one of the best performing pensions in the UK, and Hargreaves Lansdown, who's my broker, I would get monthly emails from them being like, you're too concentrated in your portfolio. Please, can you diversify? And I was like, no, it's 100% strategy. So he continued to double down, and where we are now is a 70% drawdown from the all-time high. It's the joint biggest correction, I believe, since he started this, since the Treasury. The MNAV is at 1.15 on an enterprise value basis, but he has been at discount before. He was at discount for the entirety of 2022 into 2023. And even if the company, which I do believe the market is going to have to take Strategy to a discount to its MNAV, I believe that is where max pain is. It's max pain on the basis that nothing happens, but from all the traditional finance guys, it's max pain. And so he'll have to go through the cost basis, which is 75,000. So Bitcoin will probably go below that. And then it has to go below a 1x MNAV. We may float around there for a bit, and then the market and everyone will be like, okay, so now what? The guy's solvent. The first convertible note put date is 18 months away. So what does that put us in at end of 2020, September 2027? So the market will not sustain I think they've got a quarter. I think they've got the first quarter of next year to do that damage. But even with the FUD in the past few weeks of sending Bitcoin to 80,000, I think one of Jim Cramer and the All In podcast host, what's his name, Jason Calahanis, one of them called Saylor the biggest con man on Wall Street, even though everything he does is completely transparent. He dilutes the common stockholder, which I am, and it gets to a point now where I'm like, I'm not selling the stock because it's actually like I'm just doing it in support of him now and the company and the ethos and the mission. So that's where I believe in the short term the market will try and take us in terms of max pain. I don't see any other max pain scenarios. We have treasury companies globally all at discounts to NAV. And the shareholders individually will probably maybe demand sales of Bitcoin or share buybacks, which we're starting to see. But again, majority of these shareholders that came in are, again, long-term Bitcoin holders. They understand the game. I do believe MNAV is more or less a stupid metric. And I'm not comparing it to a price to earnings ratio, but I think that's where Saylor's trying to generate this Bitcoin yield, is how much can a company generate. So I think MNAV is a basis of sentiment, fear and greed, and we're near max fear. I think the market is so different now to anything I've seen in the previous couple of cycles. 2017 and 2021 were just retail mania pumps like no other. And in 2018, that's when I got in 2017, I got in the Pico top, but 2018, I was like, oh, my money's probably gone here. Even now, we've seen 30% plus corrections in the last 18 months since BlackRock's IBIT in January 24 has been launched. The ETF AUM has only declined by 5%. So that tells me these ETF holders are diamond hands, largely and behold. So we're looking at a 36% correction in Bitcoin, peak to trough, which happened over a 45-day period. The other two correction periods were in Tariff Tantrum, which was the all-time high, was in January 2025, which bottomed out in April. So that was a couple of months. And then the 2024 one was March to August, which was about 5-6 months. So the duration of the contractions are getting smaller. So that played into huge fear of just like every day it's like down 1,000, down 1,000, down 1,000, down 5,000. Like it was just relentless. And it's like, all right, where is this market going to take us? So yeah, strategy was still here. On that November 21st bottom, Bitcoin bottomed, and then MicroStrategy has bottomed so far December the 1st. Unusual, because usually MicroStrategy leads Bitcoin in most things. So now, another interesting observation was his perpetual preferreds and how they've performed. You've got Strife, the senior credit. That's at a effective yield of 9%, just over 9%. And then you've got Stride, the junior, the junk grade, essentially. And the ratio between the two was at an all-time high, suggesting that investors were flocking to the highest security within the preferreds, the senior secured. And you can see how Strife's trading. It's like 108 above par. Well, the others are trading below par. So there's something there that he's got. And then Stretch, which he's now recently increased on the dividend on the fourth time. So I think it started at 9% to 9%. He's done 4 hikes. And I can't remember the basis points of the increments, but yeah, he's continued to increase them. And now Stretch is about 98. So he's got to try and find a way of assumed continuing to increase. He needs the liquidity, he needs the volume. But I think everything's performed so unbelievably well since these last 3 months. Like we have had, it's almost been like Armageddon since this flash crash. Like the volumes have disappeared, the market makers pulled away, and it's been really uncharted territory. And a lot of people outside of the space have come to me and goes, "Oh my God, Bitcoin's just tanking, it's falling." I'm like, it's great. There's no backstop. Like this thing goes wherever it needs to go. And you're seeing TradFi, when Nvidia beat their earnings of Q3, raised guidance, smashed earnings, the market was up 1% and then tanked. But in aggregate, it was down, I think, 8% at the max from its all-time high. And the fear is just rife. It's just like, I think the max in fear greed index got to like single digits in TradFi. It's been single digits in crypto for a while. And I think investors are just nervous that the higher it gets, but I think the stock market's going to continue to go higher, and as it has to. But I think it's that nervousness of you're due a pullback, you're due a correction. The stock market in the US is so extremely resilient. It's had COVID, it's had the tariff tantrum. Like these are huge black swan events and keeps marching on higher. But it is interesting to see how nervous TradFi get. And I think these corrections and these leverage wipeouts in Bitcoin are just the most healthy things ever. And then we were discussing before how much was liquidated in the last hour?
125 million.
Yeah, hundreds of millions. And I was saying before that these leverage liquidations are completely underreported. It's like one liquidation per second per trading pair, and it's all done on APIs. I don't know the specifics and the mechanics of everything, but the numbers are probably greater than what's being reported. So it's frightening to think how much leverage is in this system. And I think it's extremely healthy that we get all this leverage wiped out, and then we essentially go again. The problem is every time there's a little relief bounce, degenerates are going, all right, here's the time, 10x leverage, 50x, let's go again, let's go on hyperliquid and and make all my money back. But that's the problem that we're facing. But I think we're at a point in the economy with real financial nihilism. It's especially for anyone under the age of 30, which is what I am. I can really see the younger generation struggling, and they look at everything and they're like, I need to make it, and I'm not making it in a 9 to 5. Even Bitcoin's like a boomer asset. Like it's dubbed 30% CAGR, but if you actually look at it, it's like a 10% CAGR over the last 4 years, which is like not going to get you the speculative returns that you're demanding. But yeah, we're in this financial nihilism, and I think that liquidation event in October really proved that the stories were horrific, like of how much people were just gearing up on leverage and just praying this thing's going to go 10, 20, 50x in a day. And but that's the economy we're in. So many headwinds that Bitcoin faces, but leverage, I think, is one, unfortunately.
How do you see the preferred digital credit market playing out if you have Strategy, Metaplanet, Strive? Let's say you have a dozen more launch digital credit products, and then Bitcoin takes a leg up, their leverage falls, so they need to leverage back up. I mean, is that some sort of a significant flywheel when you're talking about buying whatever that number is, 10, 20, $50 billion worth of Bitcoin a week, if you have that scenario kind of be able to spool up and play out?
Well, Saylor's in the groove. Saylor's really in the groove. So he's a different beast compared to everyone. There's no comparison. It's whatever he does, and then there's everyone else. So here's 4 perpetual preferreds. Well, he's got 5 stream. I haven't checked, but I can't imagine the volumes or anything great. But yeah, I think he's the one to be able to tap into this huge fixed income market. I think he's going to have issues on the basis of MSCI exclusion, potential MSCI exclusion. If he can't get into the S&P 500, if these prefers can't get rated, again, tinfoil hat theory is that it's all designed to slow this whole thing down. Like getting 8 to 10% yield as dubbed as a money market fund is incredible. Like he was doing an advertisement on the Nasdaq in Times Square. Like any let's call them normies that walk past and look at the screen and go, wow, that's going to perk anyone's interest. So I think he's the test net. If he can get into that market sufficiently, but remember, it's taken him years to even go in for the ATM. Like, what was it? 18 months ago, he issued a 21 billion ATM, went through that really quickly, issued another one, but like it took him numbers of years to get there and a number of years to do the convertibles. So I think he will do it. As we said, he is the most driven man we've ever met, with one sole purpose. So I think it will take time. I think there are headwinds for the industry, for him. How do I see others? Well, it was also interesting to see how much the market loved his reserve, his cash reserve buffer of 1.44 billion, which he generated in 8.5 trading days and diluted the common stockholders at 1.17 MNAV. Like it was so easy for him to generate that much money. And then I saw it just then going back. There was a tweet yesterday being like, Bitcoin was $80,000 and his average cost basis is 75,000. It's like he's a terrible investor. It's a terrible trade. He should have bought something else. And what people just don't realize is he was having a failing-ish software business, or just a stagnant software business. And that software business, the annualized revenue in 2013 is greater than 2024. But he had a $500 million cash and whatever the revenue business was, nothing much, a couple of $100 million. And he has built a $50 billion Bitcoin reserve, a 1.44 cash reserve business. They are now known globally, domestically, in the Nasdaq 100. Talks of him even being in the S&P 500. Like, he's been the most incredible trader of all time. He saw Apple early, and that was one of the other things, that it's so hard to compete against the big boys, the Microsofts, the Apple. You've got to be like a Trojan horse. You've got to be amazing to disrupt that. Jensen proved you can, but that's a 1 in a million stock, Nvidia. So yeah, what Saylor's achieved over such a 5-year time frame is just remarkable. So how I see any of the other companies, I know Strive have got SATA. I think the dividend rate may be, or the effective yield is about 12% maybe. Don't quote me on that number. And I don't believe it's got to par yet. But yeah, that will take time as well. Metaplanet are their own entity in their own jurisdiction in Japan, and yeah, I think they could do really well. And they've got, again, how I got into MicroStrategy early was the tax jurisdictional arbitrage. I'm sure Metaplanet will be able to get that as well. But we're so early and it's so hard. Like, Metaplanet haven't even launched their preferreds yet. So it's like, how can you can't even say we've got, I think Strategy launched Strike in January. I think that was the first time he launched a preferred. I think Strife was in March. So it's like 9 months. And if he does get this right, then it will be so successful. But it's going to be patience, and the noise is going to be so unbearable. Like even the attacks on Tether over the past few weeks, and I'm like, you've got so many businesses in crypto that are so questionable. Like you can go after them, but Tether, like there's like one company not to try and like take on, and so the noise from the outside is going to get louder. And the other thing I just wanted to say about the max fear, like in COVID, Bitcoin went from 6 to 3,000, 50% correction, but it was a $3,000 drop. Didn't feel that pain. Like it was painful, but it's like the uncertainty was the painful part. Like you had no idea what the hell was going to happen. But the 6 to 3 was like, meh. 126,000 to 80,000, a $46,000 drop. It hurts. It really hurts. And at that point I was looking at like fixed income. I was like, let's go risk off here. I actually called I've got a guy who's in gold and in like bonds, and I was like, which fixed income instrument can I buy to protect myself? Because I was like, what's going on? But yeah, that obviously marked the bottom. But to survive and go through that it was just nuts. That added to the max fear sentiment.
What are the other things that people are paying attention to this year that the flows they're seeing inflows? You got silver, gold, AI, robotics, or like what are the top couple that are just very obvious? And is it just taking attention away from Bitcoin? How can Bitcoin be digital gold if gold is ripping and digital gold is not?
This is the first year that gold's been the best asset and Bitcoin's been the worst asset. It's all the first time that any of us have experienced a flat year. So maybe the digital gold narrative dies as well. Like the 4-year cycle narrative is dying, and we have about 20 days left for this thing to die, which will be amazing. And the AI exponential trends, look, money has to chase. And I was at an AI energy conference this week with bankers and hedge funds, and the money that's being thrown out it warrants it. But obviously there's a lot of speculation on top of how much of a monetary premium there should be. But energy is scarce. Energy is scarce, and whoever can get the energy, whoever can have the build outs, whoever can get the infrastructure, whoever has the right management teams, you're going to win. You've got to be able to deliver where I do believe all this compute is gonna be needed. I've used AI, or that iteration of AI, every day since ChatGPT launched, and to see the progress of ChatGPT now is like arguably the worst. Gemini, Grok, like they keep learning, they keep beating each other. And like whatever their IQs are, it just continues to compound, and it's just incredible to see. There's always different shiny things, but I think Bitcoin just belongs at that end of your portfolio at the moment, of like a very small single digits, 3 to 5%. Like I said, there are times where it can perform well on these crises, the Cyprus banking crisis, the Silicon Valley Bank, tariff tantrum, it did well against equities. Other times it can absolutely just go down on most occasions on headlines. But again, on the weekends, traders, hedge funds, bankers, there's nothing to look at other than Bitcoin. That is your perfect risk gauge sentiment going into Monday. So that's worth huge amounts. And I think the market's also just trying to understand where everything's going in at the moment. I think it's really interesting watching these 13F filings. I think IBIT, so ICE recently contacted the NASDAQ to be like, we need to uplift the amount of contracts on options for IBIT, which went from 250,000, they want 1 million, which is now on par with GLD, maybe SPY. But in the analysis, it was like doing modeling of what it could actually take in terms of the number of contracts. And it could, the theoretical level of liquidity and volume could match SPY. It's not going to, but in theory it could get there one day. And it just tells me that the amount of demand is huge. IBIT, again, 8 billion in options open interest, level with silver, SLV, after going live 12 months ago in options. Like, no asset could do that. No asset could do that. So I think because we're in it day to day and we don't really understand how far we've gone, that's the hardest bit. If I didn't work, or you work in the industry every single day, you did a 9 to 5 and just you were an electrician, or you weren't by the screen, and it would be so much easier to handle the volatility. You wouldn't even know. You'd be like, oh, it's down, I'll buy a bit more. I think that compounds everything as well. It makes it harder, more challenging, more mentally tough. But yeah, there's so much going on now. The political uncertainty globally, geographical uncertainty, and all of this stuff is only going to compound. And AI widens the divergence between rich and poor. So you're going to get more handouts. You're going to get trying to appease both sides of the spectrum. It's going to be impossible. And you're now seeing sovereign nations now, which was the sovereign individual thesis was people can just get up and go, and sovereigns are going to have to start fighting one another to retain the best talent. And we're seeing that in the UK. Like, it's also interesting being from the UK and being in the Bitcoin space that there's very few people. Like at the event we're at this week, I was the only one from the UK there, really. The UK Bitcoin scene is tiny. But all the talent we have is moving to Middle East, New York. So the technology and the exponential trends that are going on now is we can't comprehend all of this, because in 5 years' time, everything's going to be so different. So it's really important to know what you own. Like I've invested in and trade like a lot of the AI equity stuff, and my performance would have been a lot better if I just held through it. But I'm buying and selling or trading it, and it's like, because I don't fundamentally believe, or I can't if I can't handle a 40% drawdown in some of the AI equity names, it's because I don't fully understand it. And it's like that conviction I have in Bitcoin has made me be able to hold through 2, 3, 75% drawdowns. So I think that's the most important thing, is to be able to know what you own.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. OnRamp's multi-institution custody model distributes control across 3 independent regulated key holders in a 2 of 3 multi-sig quorum. No single point of failure, no pooled or omnibus exposure, just segregated, client-titled vaults. You retain full legal ownership while OnRamp coordinates security, compliance, and operational workflows behind the scenes. It's the strength of many, delivered through the simplicity of one. MIC is the foundation for everything OnRamp builds. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now, OnRamp is piloting flat, predictable pricing, making best-in-class Bitcoin custody and financial services more accessible than ever. OnRamp. Strength in many, simplicity in one. Visit onrampbitcoin.com to learn more. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Join us at the Win in Las Vegas, February 23rd through the 26th, 2026 for Bitcoin for Corporations. Use code KOTZ when you grab your tickets at strategy.com, and we'll see you there. It seems like, especially this year, the headlines, if you have Saylor or Larry Fink or Jamie Dimon or anyone really come out and say something positive about Bitcoin, it doesn't really make a mark. You're throwing a little pebble in the water and it's like, okay, that's nice. You have people like Adam Back saying this cycle should see $500,000 to $1 million Bitcoin. So, like, what is that going to take? Is it going to be a nation state committing to some significant purchase? Or, I mean, it's like above individuals. It's like, okay, you have corporates, you have institutions. Is it going to take governments to get us to the next level? And is part of that, maybe I skipped over the banks. Saylor says the big bulge bracket banks, let's say in the US coming in, and they've said they're coming in the beginning of 2026 or early 2026. I'm good with January 1st or January 2nd, to be clear. Is that the next kind of catalyst, or are there other catalysts that you see as well?
Yeah, well, we've got the regulatory framework, and that's coming with the Genius Act and through stable coins. So that's important. And yeah, well, I think Bitcoin's just lacking of a narrative at the moment. We've had all this good news. Not rallying with good news sometimes can be like you're in a kind of a bear market kind of thing. But just to understand that there's been $500 billion of spot sell side pressure this year. It's absolutely enormous. And I know OGs that have sold large amounts. Galaxy on the record say they facilitated 80,000 Bitcoin transaction. But it's also not that it hits 100,000 and then OGs are like, I'm selling. It's estate planning. I've got a few thousand. I need to distribute it orderly. But because the liquidity and the volume is there through the ETFs, that's why they can do it. So yeah, there's been a huge rotation. There's been a rotation on the basis of new guys coming in, which is so important. You've had the OGs and the long-term holders that have been in it for 10 plus years being like, now's my time. And you can't expect them to go on, and you need the new people to come through. And it's important to have new people to come through, but also young. You need a young industry, because otherwise, you look at the gold industry, the average age is 55, 60 probably plus. And it kind of, obviously it's not going to die out, but you lose that fight. And that's what the younger generation are going to do. Like, again, back to my financial nihilism, the younger generation are going to be fighting for the new world. Like, everyone goes about the fourth turning, but if you actually look at the fourth turnings, it's what are those periods where you see, oh, that was a clear reason, clear change. It's like, we're not happy with how the world's going, and Bitcoin is part of our portfolio, and that's how we're going to see it as moving in some form with the new world and the new economy. But yeah, going back to your point on who's coming in, and it's Larry Fink on the record with sovereign wealth funds. I've had many a conversation this week with banks, analysts, equity analysts, traders, all buying it because they actually can't own equities really, or in very small periods of time because of their job. They can't own it. So and the desks within the banks are quite small. There's like 20, 30 within the crypto digital assets trading team, and that will get built out to 100, 200. It'll become similar sizes to equities and bonds because it will get bigger. But the sovereigns on the El Salvador level, like Bukele again, is a one kind of a guy he's got that approval rating. We earned the approval rating. He had clearance. So I think the sovereigns may take a while longer, but you are seeing the sovereign wealth funds getting in. So I think it's all great. And people that were looking at 120 being like, bit high, saw 80 and were like, sounds good. Again, Fink was on the record saying they were buying in the 80s and 90s. And JP Morgan came out with a structured note based on the 4-year halving. But again, they're thinking of creative ways of how can I generate money for the bank in IBIT. So it's all coming, and because of obviously what Bitcoin was, you can't just, I guess, jump in. You also have to go through the whole charade and the whole facade of we're looking into it, we don't know. So yeah, everything takes time. But again, with the exponential trends, I think you do have to be quick. And like the conversations we had before with a few individuals about career risk, I think there is still a career risk being in Bitcoin because look, there could be another 70% drawdown, doesn't do anything for 3 years, won't happen, but that's what it could still perceive like. They don't want that risk. But the institutional guys are saying, look, that we're here. That downside is definitely limited now through the option strategies. So you're not going to get those huge violent upswings as much, which is good, but you won't get I say that, but it won't, I believe, go down to the 60-70% drawdowns. So yeah, but look, you've got asymmetric information. You know they're coming, maybe they're a bit delayed, and you've got cheap price. So like, that's your arbitrage and that's your opportunity. So this is something that we've been waiting for a long time. And it's like you've done your Bitcoin Treasuries podcast for what, 15 to 18 months, and you're spreading a message which is really important. Yeah, like my question to you, what have you learned over the past 15 to 18 months? You've played a pivotal role in Bitcoin Treasuries. You've played a pivotal role in media and an important role in terms of just like getting people in to distill a message and saying it to an audience. Like it's really powerful.
Yeah, I think the most obvious takeaway after a year and a few months is just how early we are to everything and how slowly the education process goes. And then you have all of the noise on social media, whether it's someone actually trying to long or short the stock, or it's just them wanting to grab attention for a follower count, or if they really are just that bored, which is wild to experience. But we're in an attention economy. I've heard it described as the Bitcoin Treasuries, like 1.0 bubble kind of popped, and you had people that were just cautious or waiting and not quite convinced, and or not wanting to be very public about being overly supportive.
Yeah.
And I think every single year that goes by really, especially to your point with iterating from buying it with cash taking it out with a margin loan,
Mm-hmm.
ATM, convertible, preferred. I mean, that's quite a few billion-dollar ideas. And I mean, whether you look back with hindsight from the company pioneering it and say, well, should they have just launched 4 or 5 or maybe just 1 or 2? I think of it as, well, each of those is $1 billion that you can go buy Bitcoin with. So why not launch as many of them as you can,
as the market allows you,
to build out that risk or not
Yeah.
risk curve, but the
yield curve.
The yield curve.
Yeah.
And like every $1 billion of Bitcoin that gets taken off the market permanently sounds pretty like constructive to me.
Yeah.
And it is going to take time for everyone else to be in a position, for many of them to be in a position. I mean, not everyone is Jack Mallers with like Tether and SoftBank and Cantor, and like it's just like that is wild to think about.
Yeah. It's we'll go into 2.0, and 2.0 is a strategy leading in the conversations already and is monetizing your Bitcoin. Like Marathon, for example, are already generating yield on their Bitcoin. I think it's like 5 to 7% yield. And I can't imagine Saylor's going to want to sell Bitcoin below a 1x MNAV, nor that he has to, but I think looking to lend against it in some form of very, very low risk, low yield, essentially. He doesn't need to generate I think 3% on X amount of tens of thousands, 100,000 is more than enough. I'm sure his quants will work it out.
Would an example of that be he lends it to JP Morgan at 3%, they loan it out at 4%, or whatever that arbitrage is, and it's just like, well, then Strategy's counterparty risk looks as favorable as it could be. It's de-risked, it's JP Morgan, and then that's it. They don't have to make double digits on it.
They don't need to.
They just have to make sure, just don't lose the Bitcoin sort of thing.
Yeah, or they can do option strategies with it. So there are multiple ways that he can navigate this and circumvent new ideas. But I can tell you for sure that he is in the best position he's ever been in with the company. And I think he wants the loudest people to want him to fail. I think that makes it really powerful as well. Like Bitcoin was so hated 2017 and prior. I think it's only kind of really been accepted since the ETFs to an extent. Vanguard have come into the game now, and those users, I don't even know what the users are like. I think maybe number 1 in America. But yeah, and then I think Charles Schwab said they'll come in. It's like we haven't even gone into the second gear yet. So look, you've got to try stuff and see what sticks, see what breaks. But that's what makes everything so exciting. Like you're at the forefront of a completely new industry. You're going to try new things, and not everything's going to work. But where you're seeing public companies, just the real traditional ones, just like drag it out quarter over quarter, like let it. It's a cash cow. We'll let it slow bleed out. Like no, Strategy are have got live data every second. They are judged every single second because you can judge them. You don't have to wait for a quarterly filing to say X, Y, and Z. So he's under pressure from the get-go. So yeah, that's the new way. The new way of investor relations, the new way of judging a company's success. So yeah, it's an extremely exciting time. Probably short-term cautious of depending on what Q1 can give us. I think we do need to see a pickup on liquidity in the market. Spot volume, derivatives have gone very muted. Like futures open interest is just waning down. The funding rates, we were seeing negative funding rates, which is usually a bottom. And even when the premiums were coming back, it was very muted. So it's like this year's almost been like not a bear market, but it's been just it's been flat, which is weird because we've never experienced that. So it will come back. It will come back when we least expect it, when everyone's like, oh yeah, the 4-year halving cycle was a thing and it's over and it's now another 18 months of finding a job and new narrative and all of that kind of stuff. But I think at that moment, it's when Bitcoin will pick up like it always does. So yeah, I think there's a lot of bullish things, even so on the horizon with the new Fed chair. They're going to cut rates next week. So all of this is all going to be gearing up to goosing an economy, which we know is going to happen.
We saw the spot Bitcoin ETFs get approved in the beginning of 2024. Now we're sitting at the end of 2025 and Vanguard just came in.
Yeah.
Is it reasonable to think that maybe you have 2026, the first part of it, the first banks, you literally log into your JP Morgan Chase account. You're like, oh, there's an option for me to just buy Bitcoin in a Bitcoin savings account. But it takes from the beginning of 2026 to the end of 2027 until all of the banks are like, oh, we got to get in the game.
Mm-hmm. Yeah, this will all take time. And Jamie Dimon will come out and be like, look, I don't like Bitcoin. I think it's a scam. But for the benefit of my clients, we are giving the options to do it. I don't advise any of my clients to buy it, but it's an option there. And a bit like BlackRock, it will be their greatest product. And I'm sure it'll be the same for Jamie and JP Morgan. So it's all a time thing. And no one wants to be the first. And definitely no one wants to be the last. So yeah, we're in a waiting game. But a very bullish waiting game.
Bullish waiting game. James, thanks for your time today. Really appreciate it.
Thank you for having me on, Tim. Cheers.
This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin treasuries perform against the market. Upgrade to Premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of Premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin treasury phenomenon.